Hey, good morning. This is Meir Valensky with Driving Markets. Driving while talking about markets. Remember that anything said in this piece is from media publication only, and it's not advice, not financial advice, not investment advice. Let's kick off. Okay, so last week was a shortened week. Had 3 days, Monday, Tuesday, Wednesday. Thursday was Thanksgiving. Friday was Black Friday. Let's just have a look at what exactly happened. So the biggest event of the week, in my opinion, was the minutes of the Fed that came out on Wednesday, and the Fed more or less agreed that they are going to slow down on the pace of interest rate rises in the US. That sent equity markets flying and sent the dollar down. Now, interest rates in December are likely to rise by 50 basis points in the US. However, no one really knows what's going to happen in January. Now, if inflation picks up, which I do believe it will pick up, then you're going to have more aggressive interest rate rises going to 2023. So I'm going to put my neck on the line here. And I reckon that interest rates by July, by even March, April next year are going to be at around about the 7% in the US. I can't really see inflation coming back that much. If anything, I'm actually seeing it going higher. At the moment, several factors that are impacting that inflation. Number one, the price of oil. Number two is the price of housing. Housing has gone down, and as a result of housing going down, which is a big part of the consumer price index, that has pushed prices down and pushed inflation down. However, if that's going to continue is another question completely. The consumer is pretty strong in the States. Black Friday sales came out with 9.2 billion, the highest ever in online sales. However, 78% of those deals were done on a finance package, which is buy now, pay later. And that is one item of concern, because if the consumer is not paying for those items up front and taking them on credit, then they're going to have a continuous debt, a rolling debt over the next 6, 12, 18 months, depending on how long they've taken the actual credit out for. So that is an item of concern. The Dow was up on Friday, Nasdaq was down, S&P was slightly down. The 10-year Treasury is down at 3.69%, and that's great for high-tech stocks and also great for mortgage rates. If that continues falling, then you can see mortgage rates also will come down going forward. I don't see the 10-year Treasury coming down. I see it actually going up. I think we've gone through a bit of a respite. But leading up to the end of the year, I think what's likely to happen is you're going to have equity markets pushing higher, because traders will want to push the market higher in order to cut out their losses or reduce their losses. And then come January, I think equity markets are going to be absolutely hammered. I think the dollar is going to fly. And I think we're going to go through 3 to 4 months of very, very significant volatility, with equity markets heading south by at least 10 to 15%, even 20% between January and February. Oil is an interesting one. Oil finished on Friday at $77 after the G7 capped the price of Russian oil to put pressure on Russia. It's not going to work. They put a cap on it, but Putin's too clever for them and probably likely to find another way to increase the price of Russian oil. So I don't think that's going to work, but it did push overall the price of oil down to $77 a barrel, which is the lowest it's been in quite a while. Gold is going nowhere. Gold is between 1,700 and 1,800. It's floating around, not really moving a lot. What's interesting is Bitcoin in the crypto sector. I remember being focused on that a hell of a lot recently. I still see Bitcoin falling well below 15,000. I think there's going to be significant challenges, which I mean problems, in the crypto sector. I think many more platforms are going to go bust. Binance, which is one of the biggest, is looking to set up a $2 billion rescue fund for those platforms in trouble and have liquidity problems. I think that's a big mistake. I don't know who's going to put money into that. That to me is something that's not likely to happen, and I think cryptos and Bitcoin is going to go down significantly. So be careful of that. As far as Elon Musk is concerned, which is my favorite CEO in the world, he's going to challenge Apple and Android to start bringing out a Elon Musk phone, a Tesla phone, or whatever phone you call it. And I think it's going to absolutely take over. Remember, I've been saying for a while, Apple is likely to go down. It just needs something to push it down because it's got no innovative products. I think Apple is going to go all the way down to $100 a share. I know you don't believe it. I know the viewers are completely against it, but I reckon Apple is going to go down significantly, especially if Elon Musk brings out a competitor and challenger to Apple and to Android. You can see Apple falling significantly lower. As regards Meta is a sell. Mark Zuckerberg had the cheek to go into Instagram and apologize to 13% of his sales force for firing them. He's a straight-faced, non-expressional, monotone type of guy, and really I don't like him, so anything comes out of his mouth I just don't like, but that's me being biased, and I think Meta is a meta sell. It's at these levels far too high. This is Meir Walensky with Driving Markets. Hope you're well. Subscribe, comment, share. Have a good day.